He wants to intentionally crash the market in order to lower interest rates as a byproduct of that, which is a very high risk strategy that we'll talk about later. But first, let's actually break down the Liberation Day tariffs and the controversy surrounding last week's event. The day of the tariff announcement, many people were confused on how we landed on the tariff rates for all these 150 countries. Listen in on Trump as how he describes what he's going to charge China.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it.
67% is what he said China charged us, and it didn't take long for the internet to realize that not only was this inaccurate, it was almost calculated in too much of a basic way. It's actually not a measure of trade barriers, it's more of a measure of the trade gap between China and the United States. If we read this tweet from Geiger Capital, he says that the tariffs charged to the USA is simply the nation's trade deficit with the US divided by the nation's export to the United States. So take Vietnam, which has a 90% tariff rate as listed on the Liberation Day list. Vietnam exports $136.6 billion to the US. It imports $13.1 billion worth of goods from the US. So these tariff rates are definitely overblown. For context, many of the world's largest economies have an average trade-weighted tariff rate below 5%. China's tariff rate was closer to 3 or 5% according to Visual Capitalist. You can also see that America's weighted average of tariffs is 2.2% here, and that was the average that we were charging as a country before all of these policies started to go into effect. The average tariff rate countries charged the United States was close to 7 or 7.5%. So yes, that means there was a tariff imbalance from most of the countries to the United States. But now what's happened is that the US has gone way too far the other way, and now all the US tariffs to other countries is a minimum of 10% all the way up to 34, 40, 45% for some of these countries. And these tariffs will likely make the prices of goods go up a lot of what we consume, especially if those goods are from other countries. If you're coming at this from an investment angle, I think the name of the game for your portfolio is just simply to survive. If you're investing for a long period of time, say 10, 20, 30, 40 years from now, it's likely that you won't really have to worry about the short-term volatility that we are experiencing.